Welcome to PowerBrief, your daily financial intelligence briefing. Today's episode covers a required federal financial disclosure, not a political statement. We're going to stick strictly to the filed numbers, who's reporting on them, and what's disputed, the same way we'd cover any other disclosure. Alongside that, we're covering where the broader crypto market actually sits right now, because the two stories intersect in an unusual way this year. Let's go through it with sources. On June 30th, 2026, President Trump's annual personal financial disclosure was filed with the U.S. Office of Government Ethics, as required by federal law for the president and other senior officials. According to reporting from NBC News, Time, and multiple other outlets that reviewed the filing, it lists approximately $1.4 billion in income tied to cryptocurrency ventures during 2025. His first full calendar year back in office. According to that reporting, the $1.4 billion breaks down into two main pieces. The first is more than $635 million reported from a licensing agreement tied to a meme coin bearing Trump's name. Reporting describes this as licensing income from a cryptocurrency group that issues and markets that token, not direct trading profit. The second is more than $550 million reported from World Liberty Financial, a cryptocurrency venture that reporting describes Trump as having co-founded in 2024, along with his sons, Eric Trump and Donald Trump Jr. That figure reportedly includes token sales along with an additional equity sale reported at more than $65 million. According to reporting from NBC News specifically, this makes digital assets the single largest reported source of income in this disclosure, larger than the combined income reported from Trump's real estate holdings and licensing and branding deals, which had historically made up the bulk of his reported income in prior years' filings. We want to be precise about what a financial disclosure like this actually is. It's a legally required annual report of income and assets, filed under federal ethics law, not an audited financial statement. Reporters and outlets reviewing it are working from the same public filing, and the specific dollar figures are self-reported by the filer, categorized in ranges or thresholds as the disclosure form requires, then interpreted and totaled by the news organizations covering it. It's worth explaining briefly why this filing exists at all and what it's actually designed to do. The Office of Government Ethics requires senior federal officials, including the president, to disclose their income, assets, and financial interests annually, specifically so the public and oversight bodies can identify potential conflicts between an official's personal finances and their official duties. The form itself doesn't require an explanation of whether a given income source creates a conflict. It only requires disclosure of the source and rough size of the income. That's an important distinction. The filing is a transparency mechanism, not a judgment. Whatever conclusions get drawn about conflicts of interest come from people analyzing the disclosed numbers afterward, not from anything embedded in the disclosure process itself. Multiple outlets, including reporting compiled by India Today, describe this disclosure as having sparked conflict of interest debate. We're going to be careful here to separate what's a factual claim from what's a matter of ongoing dispute. Not disputed, as far as we found in our review of this reporting. The dollar figures themselves, as self-reported on the disclosure form, and the basic structure of the two income sources, meme coin licensing and World Liberty Financial. Actively disputed and a matter of ongoing public debate rather than settled fact. Whether a sitting president earning income from a crypto venture he has a personal stake in, while his administration simultaneously sets crypto regulatory policy, constitutes a conflict of interest, and if so, what, if anything, should be done about it? That second question is a matter of political and legal opinion, not something we're going to resolve or take a position on in this episode. We're only reporting that the debate exists and that it's being driven specifically by the combination of the disclosed income and the administration's regulatory role, according to that reporting. According to a financial analysis discussed in CBS News' coverage, a CPA reviewing the disclosure focused on the mechanics of how crypto-related income like this actually gets valued and taxed compared to more traditional income sources like real estate or licensing fees. which is a useful reminder that income on a disclosure form isn't always straightforwardly comparable across categories, since crypto holdings and token sales can be valued and reported differently than, say, rental income or a licensing check. That valuation question matters more for crypto specifically than for most other asset types, because a token's price can swing sharply within the same reporting year the income is being disclosed for. A stake or a batch of tokens valued at the moment of a sale can be worth meaningfully more or less by the time the disclosure is actually filed and reviewed months later. Which is part of why financial analysts reviewing filings like this one tend to focus on the specific transaction level detail, rather than treating a single aggregate dollar figure as a stable, ongoing measure of the venture's health. A $550 million figure tied to token sales earlier in the year isn't necessarily a live snapshot of what that stake would be worth today, and reporting on this disclosure has generally been careful to describe it as reported historical income rather than current net worth. Stepping back from this one disclosure to the broader market, Bitcoin, as of late July, is trading at roughly half of the all-time high, near $126,000 it set back in October of last year, according to market data compiled in recent reporting. That's a significant decline from peak, even as the disclosure we just covered shows substantial crypto-related income being earned over the same general period. A reminder that crypto income reported on a disclosure and the current price of crypto assets are two different things that don't necessarily move together. According to that same reporting, Coinbase CEO Brian Armstrong and ARK Invest's Cathie Wood have both suggested Bitcoin may have found a price floor around the $60,000 level, with the possibility of a rebound later this year. We want to flag clearly that those are opinions from specific, named individuals with their own business interests in crypto markets. Armstrong runs a major crypto exchange, and Wood runs an investment firm with significant crypto exposure. Not neutral, independent forecasts, and reporting attributes these comments to them by name rather than presenting them as consensus. Elsewhere in crypto, reporting describes Shiba Inu, a much smaller and more speculative token, climbing 36% to roughly $0.057, adding about $1 billion to its market value and pushing its total market capitalization to around $3.4 billion, with daily trading volume reported near $380 million. We're including this specifically as an example of the kind of sharp, fast moves that happen in smaller tokens. A 36% move in a token with a $3.4 billion market cap is a very different kind of event than the same percentage move would be in Bitcoin's roughly $1 trillion market. And lumping crypto together as one undifferentiated asset class tends to obscure just how differently these different tokens actually trade. On the question of how many Americans actually hold crypto at all, we found real disagreement across sources that we want to be upfront about, rather than pick one number and present it as settled. A Security.org survey put crypto ownership around 30% of U.S. adults. A Motley Fool Money survey put it around 22%. Gallup's trend data has cited a figure near 14%. And a Federal Reserve survey found 10% of U.S. adults reporting crypto use or ownership. Those are meaningfully different numbers from different credible survey organizations using different methodologies and different definitions of what counts as owning crypto, anywhere from a single small holding to active regular use. We're not going to pretend there's one clean adoption number. The honest read of this data is that it depends heavily on exactly how the question is asked and who's asking it. To illustrate how much methodology can move a number like this, a survey that asks, "Have you ever purchased any amount of any cryptocurrency?" will almost always produce a higher percentage than one that asks, "Do you currently hold cryptocurrency as part of your regular household finances?" Even when surveying the exact same underlying population, simply because the first question captures anyone who bought a small amount once and never touched it again, while the second filters for something closer to sustained, active ownership. None of the four sources we cited published identical question wording in what we reviewed, So some portion of that 3-to-1 spread between the highest and lowest figures is very likely explained by exactly that kind of framing difference, not by the four organizations surveying fundamentally different populations. Stepping back across both halves of this episode, there's a real tension between the disclosure story and the market story that's worth naming directly. The disclosure shows enormous reported income tied to crypto ventures with a direct personal and family connection to the sitting president, at the same time that the broader crypto market, Bitcoin specifically, is trading roughly 50% below its own recent peak. Those two facts sitting side by side don't tell you whether the underlying ventures are healthy or struggling. A licensing agreement or a token sale can generate large reported income in a given year, independent of where that token's price sits today, which is part of why we separated these into two distinct stories rather than blending them into one Trump crypto narrative. On the disclosure itself, the open question that reporting keeps returning to isn't really about the numbers. Multiple outlets seem to agree on the basic figures. It's about the structural question of a sitting president holding a personal financial stake in an industry his own administration regulates. We're deliberately not resolving that question for you because it's a legal and political judgment call, not a factual one we can settle by checking a number against a source. What we can tell you plainly is that the debate is real. It's being driven by named ethics and legal commentators across multiple outlets, and it exists specifically because of the combination of disclosed income and regulatory authority, not because of the dollar amount alone. On the market side, the through line is that crypto as a single word is doing a lot of work to obscure very different situations. Bitcoin at half its peak, with two named, self-interested voices suggesting a possible floor. A small speculative token moving 36% in a way that's mechanically very different from the same move in a trillion-dollar asset, and a basic adoption question where credible surveys disagree by a factor of 3. If you're trying to reason about the crypto market as a monolith, this week's actual data argues against doing that. There's one more connective thread worth naming between the two halves of this episode. Regulatory policy is exactly the mechanism that links a sitting administration's personal financial exposure to the broader market's price action. If crypto-friendly regulation genuinely does support prices over time, then anyone with a personal financial stake in crypto ventures benefits from that policy direction, regardless of what their specific intent was in pursuing it, which is precisely the structural conflict of interest concern that reporting describes, stated in its most neutral, mechanical form, without asserting anything about anyone's actual motives. A brief note on our own process. Same as always. We did not independently verify the underlying disclosure filing or the survey methodologies ourselves, and we did not speak to the White House, World Liberty Financial, Armstrong, or Wood directly. Every figure and every attributed opinion here is sourced to the specific outlet or individual that reported or stated it, and we've tried throughout this episode to keep factual claims about the filed numbers clearly separate from disputed political and legal judgments about what those numbers mean. One last honesty note. Stories that combine a sitting president's personal finances with market analysis are exactly the kind of topic where it's easy for a script to drift into editorializing without the writer noticing it happening. We reviewed this episode specifically for that before recording, and where we found ourselves tempted to characterize the disclosure as good, bad, appropriate, or inappropriate, we cut that language and replaced it with a description of what's actually disputed and by whom. If anything in this episode reads as taking a side despite that effort, that's a miss on our part, not an intended editorial stance. Sources for this episode: NBC News and Times reporting on the June 30th financial disclosure and its breakdown, India Today's coverage of the conflict of interest debate it has sparked, CBS News' coverage of a CPA's analysis of the crypto income figures, and market reporting on Bitcoin's price relative to its October peak, Brian Armstrong's and Cathie Wood's comments, Shiba Inu's price move, and the Security.org, Motley Fool, Gallup, and Federal Reserve crypto ownership surveys. Links to the original reporting are in the description. That's this week's Power Brief. We'll be back with the next update as these stories develop. Subscribe for daily market analysis.